Hello and welcome. So I'll introduce myself. My name is Louise and I'm a multi-award winning clinical hypnotherapist and trading psychologist. Now, I've been working successfully with traders for the last decade. I'm really passionate about helping traders, and I specialize in the subconscious mind, hypnosis, trading psychology, and the belief system. I'm really excited to be part of Maven Trading and your trading psychologist. And every week, I will be sharing videos to help you on your journey to trading success. We'll be working through different topics, such as the psychology of trading, successful traders, and techniques to help you become a successful trader long term. So, I look forward to us working together and sharing my insights and value to you. So let's begin. So I'm going to start by talking about the most important part of trading, something that often gets overlooked in the trading world. As a trading psychologist and clinical hypnotherapist, I have seen firsthand how mastering your mind is vital for long-term success in the markets. Now, you might be wondering, why does trading psychology matter? Well, let me tell you, trading isn't just about analyzing charts and executing trades. It's about how you manage your emotions, staying disciplined, and making rational decisions even when the market is chaotic. It's about investing in your mindset, belief system, and well-being. Trading psychology is the secret ingredient that separates successful traders from the rest. It teaches you to master your emotions, stay disciplined in the face of adversity, and maintain a clear-headed approach to trading. Trading psychology is a study of how emotions and mental processes influence trading decisions and outcomes. So I'm here to emphasize its significance in your journey as a trader. Now, understanding trading psychology is like unlocking the hidden blueprint to successful trading. It's about recognizing the psychological barriers that can affect your performance and learning how to overcome and manage these. Again, I'm here to support you on your journey. It's about recognizing the psychological barriers that can affect your performance and learning how to overcome and manage these. Through creating resilience and self-awareness, you'll be better equipped to navigate the ups and downs of the market with confidence. And by understanding the psychological factors and learning how to manage them effectively, you're creating the foundation for long-term success. Successful trading requires a combination of skill, a good strategy, and sensible risk management, and, of course, good psychology. Long-term success in trading requires a steadfast commitment to continuous learning and adaptation. Now, whether it's fear, greed, or self-doubt, understanding your own psychological tendencies is key to overcoming these challenges and staying focused on your trading goals. Now, by developing a strong psychological foundation, you'll not only become a better trader, but a more resilient one. You'll learn how to bounce back from losses, stay calm under pressure, and maintain a disciplined approach, even in the face of volatility. The role of emotions in trading. In the fast-paced world of trading, emotions play a central role in shaping decision-making, processes, and outcomes. It is important to understand the profound impact of emotions on traders' behavior, performance in the markets. So we're going to explore the emotions in trading. We'll talk about the fight, flight, and freeze response. Significant emotions such as fear and greed, embracing uncertainty, and the importance of discipline and building resilience and emotional intelligence. So emotions are the driving force behind every trade. They can cloud judgment, cause you to deviate from your trading plan, and self-sabotage. When fear takes over, this can be a major problem for traders. So we're going to go on to talk about the fight, flight, and freeze response, because it is important for every trader to understand. I'm sure most of you know this, but I'll explain in depth why this is a big problem for traders. Now, the fight, flight, and freeze response is an ancient survival mechanism designed to protect us from perceived threats. When we're faced with danger, our bodies undergo a cascade of physical responses, and it prepares us head on. So what can happen in the context of trading? These responses are triggered not by a physical peril, but by perceived threats to financial well-being, such as sudden market downturn or a string of losses. Now, understanding why these emotions occur is critical for traders seeking to master their emotions. Fear, the driving force behind the fight, flight, and freeze response, often arises when traders perceive a potential loss of capital. This fear can be exacerbated by a variety of factors, including uncertainty in the markets, past trauma or failures, and even cognitive biases, such as loss aversion and confirmation bias. Now, traders cannot simply run or suppress emotions. We're emotional beings and it's impossible, and we shouldn't try and suppress these. Attempting to ignore or deny fear is something that we shouldn't do. The attempt to suppress emotions can manifest in physical symptoms such as increased heart rate, sweating, and difficulty concentrating, all of which can further impair trading performance. So, successful traders recognize that managing emotions is not about eliminating fear or trying to suppress it, but rather about understanding and using it to their advantage. So by acknowledging and accepting emotions, you can develop techniques for managing these emotions. This may involve techniques such as deep breathing, mindfulness, hypnosis, or working with your subconscious mind. And we're going to talk more about the techniques that will help you on your journey as a trader going forward. Furthermore, learning to identify the warning signs of the fight, flight, and freeze response is crucial for you as a trader. It will help you to be one step ahead. So start by paying attention to your body, to your breathing, to how you're feeling in your body and emotionally. Self-awareness is key for every trader to have. Finally, it's essential to address going on tilt, a state of emotional and cognitive overload characterized by impulsive and irrational behavior. I'm sure you've heard of this and even experienced it before. So this often occurs when a trader is feeling under threat, when perhaps there's a loss or losses. So what can happen is it can trigger self-sabotaging behavior. Going on tilt can lead to a downward spiral or self-destructive behavior, further exacerbating losses and eroding trading confidence. So, understanding that the fight, flight, freeze response is a powerful force in the world of trading. It is capable of dictating trader success or failure in the markets. And by understanding the underlying causes of these reactions and learning to manage emotions effectively, it will most certainly help you set the foundation for long-term success. And I have seen this many, many times in my last 10 years working with traders. The emotional roller coaster of trading. This can be both exhilarating and exhausting. Moments of euphoria can often be followed by periods of despair. The emotional roller coaster of trading can take toll on a trader's mental and emotional well-being. It can lead to burnout, anxiety, and even depression if not managed effectively. Despite the challenges posed by the emotional roller coaster, many traders find passion and fulfillment in what they're doing. Embracing the highs and the lows as integral parts of the trading experience is very important. By acknowledging and accepting the emotional nature of trading, you can develop resilience and coping strategies to navigate you through the inevitable ups and downs with confidence and composure. So let's talk about the different types of emotions, because there are many. And over my years of working with traders, a lot of traders have said that actually trading has brought up emotions that they didn't even know existed. So let's talk about the main two emotions, fear and greed. Fear of loss often leads to hesitation, indecision, and an aversion to taking risks even. It can result in missed opportunities and stagnant growth. Where on the other hand, greed can drive traders to chase profits, take excessive risks, and deviate from their trading plans, ultimately leading to significant loss. We're going to talk more as we go on about ways, techniques that can help you, again, as a trader, to really manage all of these. So the next one is euphoria. Now, this is important to be mindful of, because one of the reasons why traders experience FOMO is that being in the markets and having that win can release the dopamine chemical, the feel-good chemical that we all like to experience. So it's important to be mindful about that. So euphoria, the exhilarating feeling of success that comes with a profitable trade or a good trading day. Now, while this can be rewarding, euphoria can also lead to overconfidence and risky decision-making. It's essential for you to remain level-headed, grounded, and avoid impulse decisions during these moments of triumph. Frustration. This is the most common word that I hear from traders. I'm frustrated. I feel frustrated. And I do understand. So, frustration is probably the next common emotion, especially in the face of losses or missed opportunities. Traders can feel often frustrated with themselves for not sticking to their plan or going on tilt. However, allowing frustration to dictate your actions can lead to further losses and the ability to bounce back from setbacks. It's really important to maintain discipline and focus on long-term goals, even during challenging times. It's important also to be your biggest supporter. Self-talk and compassion are some of the areas we're going to talk about in a later video. In addition, traders can also encounter feelings of anxiety, impatience, hopelessness, and regret. Each of these can impact decision-making and long-term success. Losses. Again, this is one of the most important things for traders. When faced with losses, traders can experience a range of emotions, including fear of failure, frustration, disappointment, the temptation to chase losses, the urge to recoup losses quickly by taking excessive risks can further exacerbate the situation. It is essential to adopt effective strategies to help you manage these times, and learning from losses to maintain emotional resilience and improve trading performance. One of the primary psychological challenges associated with losses is the fear of failure and loss. Many traders can perceive loss as a reflection of their abilities or competence. This can lead to feelings of self-doubt and inadequacy. And so to overcome this fear, traders must recognize that losses are an inevitable part of trading, and they do not define worth as a trader. Trading is a business. In business, there are always business costs. In trading, there is always going to be a loss or losses. It is part and parcel of trading. And so having that acceptance of this can really help you on your journey. Another common psychological challenge is the temptation to chase losses. After experiencing a loss, traders may feel a sense of urgency to recover losses quickly, and this often leads to deviating from the trading plan, revenge trading, and even blowing accounts. To avoid this trap, it's important to remain disciplined and adhere to your risk management rules. This may involve accepting the loss, cutting losses early, and refraining from revenge trading. Learning from losses requires a proactive approach to self-reflection and improvement. So instead of dwelling on the negative aspects of a loss, focus on identifying the underlying reasons for the loss and really see this as a time for growth on your journey. So this may involve analyzing trading data, identifying patterns of behavior or decision-making errors, and adjusting trading strategies accordingly if needed. Reframe losses as learning opportunities rather than personal failures. It can really help to shift your mindset, which can help you approach losses with a more constructive outlook. Managing losses effectively requires a combination of emotional resilience, discipline, and a growth-orientated mindset. And we'll talk more about losses going forward, and I'll teach you how to learn to manage these. So let's go on to talk about biases. This is a really interesting subject. Cognitive biases are inherent tendencies in human psychology that can significantly impact traders' decisions. These biases can often lead traders to make irrational judgments and deviate from sound decision-making principles. Understanding common biases and developing strategies to mitigate their effects is essential for you as a trader to maintain objectivity and improve trading performance. One of the most prevalent cognitive biases in trading is confirmation bias. Confirmation bias often occurs when traders seek out information that confirms their existing beliefs or opinions while ignoring evidence that contradicts them. For example, a trader may selectively focus on news articles or technical indicators that support bullish outlook on particular stock while dismissing signals indicating a potential downturn. To mitigate the effects of confirmation bias, traders must cultivate a mindset of intellectual humility and open-mindedness. This involves actively seeking out alternative viewpoints and considering conflicting evidence before making trading decisions. Another common cognitive bias that affects traders is anchoring bias. Now, the anchoring bias often occurs when traders rely too heavily on a specific point or anchor when making decisions, even when the anchor is arbitrary or irrelevant to the current situation. For example, a trader may fixate on the price at which they initially purchased a stock and refuse to sell it for a loss, despite changing market conditions and indicating a downward trend. So to combat anchoring bias, it's important to adopt a systematic approach to decision-making and avoid relying solely on arbitrary reference points. Implementing refined trading rules and risk management strategies can help you as a trader make more objective decisions based on current market data and your strategy. So, overconfidence is another cognitive bias that can lead you as traders to overestimate abilities and take excessive risk. Overconfident traders may believe they have superior knowledge or skills compared to others, leading them to engage in aggressive trading. However, overconfidence can lead to significant losses and undermine long-term success in the markets. To overcome the effects of overconfidence, traders should adopt a realistic and humble assessment of abilities and limitations. In conclusion, cognitive biases pose significant challenges for traders and can impair decision-making if left unchecked. So building a mindset of intellectual humility, adopting systematic decision-making approaches, and adhering to strict risk management, this is really going to help you on your journey again as a trader. to wade through these biases. Now, let's talk about one of my favorite areas, emotional intelligence. It is what sets successful traders apart from the rest. It is vital for every trader to invest and build on emotional intelligence. So, what is emotional intelligence? Emotional intelligence is made up of 4 main skills: self-awareness, self-management, social awareness, and relationship management. Self-awareness involves being conscious of your own emotions, including how they influence your thoughts, decisions, and behaviors while trading. Self-aware traders can often identify when they're experiencing emotions such as fear, greed, or overconfidence, and understand how these emotions may affect their trading performance. It is one of the most important factors for trading success, self-awareness. Self-regulation is the ability to regulate or manage one's emotions. This means it's being able to control emotions, reactions, and maintain composure, even in the face of market volatility or unexpected events. Self-regulated traders can make more rational decisions and disciplined decisions rather than letting emotions dictate their actions. Now, empathy is often perceived as an individual pursuit. Understanding the emotions of others, such as fellow traders or market participants, can provide valuable insights into market sentiment and behavior. Traders who are or have empathy can better anticipate market movements and trends, allowing them to adjust their strategies accordingly. So the rewards of good emotional intelligence, well, there's many. Improved emotional intelligence will equip you with the resilience and help you on your journey as a trader to long-term success. It will help to introduce deeper insights into market dynamics and enhance your ability to execute trades with confidence and conviction. So by embracing and investing in emotional intelligence and mastering the art of mindfulness, self-awareness, and emotional regulation, it will help you become a stronger, more resilient trader. So let's talk about continuous learning. Now, this is really important for traders. And I know that I've been using the word important a lot, but it's really emphasizing the importance of certain areas to help you as a trader achieve long-term success. So continuous learning is not just about reading books and studying. Of course, that's really important, but it's also about continuous learning and investing in your psychology. Now, one of the key benefits of continuous learning in trading psychology is the opportunity to deepen one's understanding of the psychological factors that influence your decision-making. So by investing and studying topics such as emotional intelligence, cognitive biases, and decision-making processes, it will help you gain valuable insights into your own behavior. This deeper understanding enables you to anticipate market movements more accurately and make better formed trading decisions. Continuous learning provides you also with an access to a wealth of knowledge and expertise from a variety of sources. And of course, this includes books written by renowned psychologists and traders, even seminars covering a range of topics related to trading psychology. Now, by actively seeking out these educational opportunities, you can expand your skill set, stay up to date with the latest trends and developments in the field, and gain valuable insights from experienced professionals. Now, it's very important to make sure that you source information from reputable companies and books and sources. So networking with other traders also provides opportunities for collaboration, support, and mentorship. You know, trading can feel really isolating, and so it's very important that you've got a good network or support group that will help you grow as a trader. Keeping a trading journey, I strongly advise this. It can really help to build better self-awareness and it can help you to understand your patterns and behaviors. And you can journal not just your P&L, but how you're feeling. It's also good to journal things such as how you were feeling before your trading session. Did you have a good sleep? Were you feeling okay? Were there any other factors or areas in your life that were perhaps causing you stress? Or did you feel composed and calm before your trading session? Again, this can really help to build up more data and help you understand yourself better. So, continuous learning and self-improvement are essential components of trading psychology. And by investing in ongoing education and seeking out opportunities for personal development, you will enhance your understanding of psychology, expand your skill set, and improve your trading performance overall. And now we're going to talk about something very, very interesting. Practical techniques for managing emotions. So you may want to take some notes during this time. I'm going to share some valuable insights into the techniques and practices that can really help you to learn how to manage your emotions and trade with focus, discipline, and composure. Now, these practices I've taught for the last decade, and I've recommended as well over the years, and they have helped hundreds of traders. The first practice is meditation. Now, some of you may already practice meditation, and that's great. But if you've never experienced or meditated before, I'm going to briefly explain what it is and how you can use this in your daily life. It won't just help you as a trader, but it will help you in all areas of your life. Meditation is a powerful technique that can transform the way you approach trading. And if you've never experienced meditation before, fear not. I'm going to provide you a brief overview of what it entails and how you can integrate it in your daily routine to reap its numerous benefits. Meditation is a practice that involves training your mind to focus and redirect your thoughts. It often involves sitting quietly and paying attention to your breath, thoughts, and your body. Meditation is not about emptying your mind. Rather, it's about just observing your thoughts without any judgment and introducing a sense of inner calm and clarity. So, how you can incorporate meditation into your busy schedule is simpler than you think. Just start by setting aside a few minutes each day to sit in a quiet, comfortable space. Close your eyes, or you can focus on one spot in the room, and you simply focus on your breath. Breathe in deeply and exhale slowly, and you'll start to feel your body relaxing. And as the thoughts arise, gently acknowledge them and let them pass without becoming. And as the thoughts arrive, just acknowledge them. Let them pass without just being attached to them. Focus on the sensation of your breath moving in and out of your body and anchor yourself in this present moment. And it's like anything, repetition. It's like driving a car. The more you do this, the more it will become second nature. The benefits of regular meditation are tenfold. Not only can it help reduce stress and anxiety, but it also enhances focus, concentration, and emotional resilience. These are all essential things for successful trading. So by training your mind to remain calm and centered, you'll be better equipped to navigate the ups and downs of trading. Meditation is a valuable tool that can empower you to become a more mindful, self-aware, and disciplined trader. So anybody can practice this, and all you need is 10 minutes of your day. Now, visualization. I have been practicing visualization for over 10 years, and on a personal note, it has and continues to change my life. It is unbelievably powerful. Now, when we imagine something, our mind doesn't know if it's reality or our imagination. And when we bring in the emotions and feelings connected to those images and the visualization, it is very, very powerful. Manifestation is real. So if you've never experienced visualization before, then I will talk you through this. And it's a journey that's individual to you. And again, it's repetition. The more you do this, the more it will become more familiar. easier, and even enjoyable. So it's really about mental imagery or a mental rehearsal. And it involves creating mental images or desired outcomes or experiences that you want in your life. It's basically painting a picture in your mind, using all of your senses to make the experience as real as possible. So I'll give you an example. You simply close your eyes and then you think about how you want to feel and to perform as a trader. So you'll sometimes see yourself as though you're a third person. And as you progress in your visualization, you can even be in a space and experience where you're actually in your body. So you're seeing the charts, you're feeling calm, you're making all of the right decisions, you're composed, and you are in control. You've got great emotional intelligence. And it's really about having joy with this as well. Have fun with it. It doesn't have to be a serious experience. And the more you have fun with it and joy with it, the easier it will feel and become. Visualization is being practiced by athletes, performers, and successful entrepreneurs for years. And it can really help you achieve your goals short-term and long-term. So the steps again to visualization is to find a comfortable space where you won't be disturbed. You can sit down or you can lay down. And just take a few deep breaths to help you to get into a nice, relaxed place. And just imagine yourself where you want to be, what you want to see in your future, what you want to achieve, because it's possible. And really bring in the feelings and emotions around this. So perhaps you're feeling confident, proud, happy. Perhaps you're seeing the success that you deserve. Maybe you'll even imagine yourself or picture yourself executing trades with precision and confidence, following your trading plan with unwavering discipline. And imagine feeling calm, focused, and in control of your emotions. And as you visualize each trade, imagine it unfolding exactly as you planned. See the price action moving. Feel the satisfaction of a well-executed trade. And pay attention to the emotions and feelings that are coming up, because at first you may feel that it doesn't feel familiar or it's feeling too difficult, but just go with this. It's repetition. Again, the benefits of visualization are profound. And when you regularly engage in this practice, you can train your mind to stay focused on your trading goals. So this is another practice which I highly, highly recommend. Breathwork. Now, every trader needs to learn breathwork. It will help you to go from a heightened state of stress to complete calm and composure within 90 seconds. Every trader needs to learn a technique. Now, there's many different techniques out there. The one I recommend is 7-11, and it simply is breathing in through your nose or through your mouth for the count of 7, holding for the count of 1, and exhaling through your mouth for the count of 11. So again, it's simply finding a quiet spot where you won't be disturbed. And it takes 2 minutes. And basically you just focus on your breath. It will help to calm your thoughts, to ground and center you. Now, my suggestion is to practice and to use your breath work and do your breath work technique before your trading session, during your trading session, and even after. So before your trading session, it will set you up to feel more calm, to relax your nervous system, and to help to ground you. In trading, it will help you to stay focused and calm and reduce going on tilt, and to help you make better decisions. And after trading, it's important to step away from the charts and to take 2 to 3 minutes just to help calm down your nervous system once again. So I highly recommend that you do this every single day, and it will really help. So the benefits of breathwork are vast and varied, and regular practice will help to reduce anxiety, stress, improve concentration, mental clarity, and enhance emotional regulation. It will also boost your resilience. So now we are going to talk about an area that I am specialized in. We're going to talk about hypnosis and the subconscious mind. So first off, hypnosis is nothing like stage hypnosis. It's completely different. Hypnosis is a state of focused attention and heightened suggestibility where the conscious mind takes a backseat, so it starts to relax. And this allows the subconscious mind to become more receptive to positive suggestions, beliefs, and images. So through self-hypnosis, you can harness this state to reprogram your subconscious mind. It can help to overcome limiting beliefs. It can change negative patterns, behaviors, and it can really help you achieve amazing success as a trader. So I've been a hypnotherapist now for over a decade. And for me personally, hypnosis has changed my life in different ways. Hypnosis is safe, it's relaxing, and you are always in control. Any changes that you do not want to make will never happen. So we're going to talk about accessing the subconscious mind. Again, this is one of my areas of specialty and the belief system. The subconscious mind is like the powerhouse. It is where we hold our beliefs, habits, memories, and much more. It is the driving force behind much of our behavior, including trading decisions. So this makes it incredibly effective for addressing deep-seated issues and ingrained patterns of behavior. Reprogramming limiting beliefs. Now we are going to talk more about beliefs. Again, this is an area that I specialize in, and every person, not just traders, should invest in their belief system, because most of us have at least one limiting belief that can hold us back in life. But we'll talk more about that going forward. Many traders can struggle with self-doubt, fear of failure, and limiting beliefs that can sabotage their success. Through self-hypnosis and hypnosis, you can reprogram these beliefs at the subconscious level, replacing them with empowering beliefs that support your goals and aspirations. By communicating and aligning with your subconscious mind, you can create powerful internal framework for success in trading and beyond. It can help you to manage your emotions and stress, because as we know, emotions play a significant role in trading. Self-hypnosis can also help to regulate your emotions more effectively, reduce stress and anxiety and fear, and it can also promote a nice state of calm and composure. It can also help you to train your mind to stay centered, focused, and enhance your trading performance and productivity. So in conclusion, self-hypnosis and hypnosis can offer a powerful way to help you unlock trading success. So I encourage you to explore the transformative possibilities of self-hypnosis and hypnosis and experience the profound benefits for yourself. Here's to your trading success and personal growth through the power of your subconscious mind. So you may be asking, how do I implement and practice these? Well, it's pretty simple. I think the first thing is to schedule time out for these practices. Now, you don't have to do all of them. You know, there's some traders that I work with and know that just meditate. Others will just do the breath work, but it's whatever feels right for you. So begin by incorporating these techniques into your pre-trading session. Set aside time, as I mentioned, for these techniques. During trading, you can pause and take a moment to engage in deep breathing whenever you feel overwhelmed or anxious, or even before. And whenever negative thoughts arise, challenge them with rational, positive thoughts, reminding yourself of your strengths and your capabilities. By mastering your emotions and honoring psychological resilience, you're paving the way for long-term success. So embrace these techniques with enthusiasm, curiosity, and dedication. They're really going to help you on your journey as a trader. So we've come to the end of our session today. I hope you've enjoyed it, and I hope you found great value. I wish you great success in the markets this week, and I will see you next time.